What's up, guys? Welcome back at Trade with Ricky. Today we're gonna talk about a major topic when when you trade and when you invest. We're gonna talk about volatility, and now volatility can really make you lots of money or can really kill your portfolio if you don't know what you're doing. So I'm gonna compare volatility strategy when you invest and when you trade. The basic principle is that when you invest in long term, you're looking for low level of volatility, meaning that you wanna have a steady gains, each day and throughout the year. When you trade, since you are a short-term type of an investor and you have a short-term type of mentality, you're looking for high volatility, meaning that you opt for big movement in a price that can really, if you know what you're doing, they can make you 1 year gain in 1 day or a couple of days. So basically, volatility is the change in price, and depending on how strong the change is and how fast it is, it can be high or low. For the past 10 years after the Great Recession in 2008, volatility has been kind of low in the US market and in the worldwide market, and this is because of the interest rate who have been really almost close to zero for most of those 10 years, and just now recently they're picking up. When interest rates are low, usually investors start to buy, and the stock market it's kind of steady in growing. It's not going up and down frequently. When you start to see interest rates going up, and when you start to see other major things in economics, factors like unemployment rate or inflation or GDP, and you see those values have important change quarter after quarter, then you see volatility going up, and then you can see a major price and movements. So basically, when there is high volatility, investor wants to get out from the market because he's afraid that his portfolio or her portfolio can be wiped out in a matter of days. Instead, if you are a trader, you opt for high volatility because high volatility creates opportunity for you in the market to make 10%, 15% in or more in 1 day or a couple days. So today, to talk about volatility, I'm gonna do an example, and I'm gonna use GEVO for my example. GEVO has been the hottest stock not only for this week, but I would say for the month of June. GEVO yesterday morning before the opening was trading around $4, and yesterday closed at 12. Let's check this out here. It closed at 12.67. As you can see, that's about 3 times the opening price. But there was one point probably around midway throughout the stock trading days that it went up all the way to 20. So 5 times more the original. 5 times more the original starting price, which is a 500% increase in portfolio. So I'm not promoting those type of stocks. I'm just using GEVO as an example to see how volatility works for you and how it can be good or bad depending which side of the market are you in. So basically, what happened to GEVO yesterday is that in the pre-market there was this news that came out, major news, that really is gonna help in the long run GEVO to make more profit. Basically, GEVO is a company that uses renewable sources as an alternative for oil. For oil, for example, they use corn, for example. And yesterday there was this news that the FDA approved an increase in isobutanol of about 16%. And this will help GEVO in the long term because they use isobutanol a lot. So when this news came out, traders they jumped on this news, and you see a big here, those transparent green candle. This is the volume that is stacking up, and this is a positive sign. As you see, this huge volume, green volume, positive sentiment, and then you see this gap up. So basically, those type of stocks, especially stocks that are traded at a really low price, news can really be effective when you trade them. If there's a positive news or negative news, you can see a really big swing in their price. So just be aware that when you trade those type of stocks, you don't really care about the fundamentals, because usually, since they're traded so low, they're not good stocks to buy because they're not worth that much. So long term, it cannot be a good stock investment as long as it doesn't produce a positive profit. And then this stock yesterday didn't trade based on technicals. It didn't reach a particular technical level that caused a spike. This stock traded strongly on the news, and this was an important news, and it skyrocketed all the way to 20 at some point. So when you trade those stocks, sometimes they're called penny stocks, depending which range in price they are. If they are lower than $5 per share, they're called penny stocks. But sometimes you see those movements in stocks that are even higher than $5 per share. So basically, when you trade those stocks, the biggest advice I can give you guys is that not to be greedy. Do not think that this stock is gonna go up forever. Yes, you can make huge gains, you can make a really nice profit, but history repeats itself. As if you guys remember the diagram that I showed you guys on Friday about greed and fear, about the issue of bubbles in the stock market and in any other type of market, it's really easy to be caught out in the wrong side of the market and to lose money when there are those big movements. So if we analyze this stock all the way to here, which this was the yesterday movement, as you guys can see, the news came out around here, and then there was this huge gap up volume. I would not bought the stock here because I usually do not trade the first 30 minutes. I'll wait for my precise setup, and usually the first 30 minutes you can see a gap up, but then for the rest day of the market, the stock is gonna go down and trade lower. So you wanna see how the stock is gonna behave. So you're gonna wait first 30 minutes and see. After that, you want to see a consolidation. If this high price is gonna stay or is gonna trend lower. As you guys can see, it didn't go lower and then actually broke the previous high level around here. So personally, I would have bought the stock in this range here, which is around 10-11. If you take a look at the indicators, this is the RSI, relative strength index, and this is the MICD. If you would have looked at the indicators, and this is the simply moving average, this line here, probably you would have not bought the stock here because you see the RSI is trading at 78, and usually when it's over 70, it means the stock is overbought. But if I see the trend is good, and if I see there is volume, and if I see that it can go higher than this, I prefer to go with my trend idea than what my technical indicators are telling me. But you would have bought, I would have bought personally, if I would have looked at the trend and the indicators, I would have bought the stock here in this range here, because as you can see the RSI going up again, MACD refuting to go lower, and then I personally would have sold the stock here when the MACD closed and when the RSI went lower than 70, and which probably corresponds around this area over here. So this is what I would have done if I would have bought the stock yesterday, looking at the news, looking at trend, and looking at indicators. Okay, not looking at fundamentals, because yesterday this stock didn't move because of fundamentals. And then I would have not touched the stock any further. Like, just make this trade, make your money, and run. One time I traded a stock like this, but it was in the $10 range, and I made a 10% profit during my trading day. This was in between the first 2 hours of the market open. Then I didn't look at the chart for another hour. Then I went back in 2 hours before the closing, and I bought the stock again, hoping that it was gonna spike before the close, but it didn't. It actually traded lower, and I lost 20%. So at the end, I lost basically 10% on a day that I was supposed to make 10%. So what I'm saying is that don't be greedy, don't chase those type of stocks. If you make money, if you make money and you see that the trend is changing, get out. So after this drop here, there was no reason for you to hold the stock any longer for the day. No reason at all. No. So for me, the perfect setup was to buy the stock here and sell it in this range over here. Then of course, if you were able to short this stock, if your broker had the shorts available for you, then I would have personally shorted the stock here, or even I would have shorted the stock probably here, and waited. Instead, for today, again, there was this gap up that was based on the news of yesterday, and this is why you guys didn't see a major movement like yesterday, because yesterday I think it closed at 240% up. Today closed around 70% up, which is still amazing. Like, to make 70% on a day, it's like crazy. But compared to yesterday, it's 3 times less and more. So today, if I would have traded this stock, I would have bought the stock in this range here, and then I would have sold it here. So I would have made like $2. I would have probably make like $2 profit. So this explains basically how volatility works. And when you trade the market, in the stock market, volatility, you can make lots of money if you are in the correct side of the market, but it can wipe your portfolio in a matter of days if volatility keeps going. If you guys remember this, the first week of February of this year, the VIX, which basically is the index of volatility, measure volatility, is spiked, and when the VIX is spiked, the stock market trades opposite. So I think there was like a week that it lost 6%, and this explains how volatility, if you are long-term investors, can be really bad for your portfolio. That's why when you see that interest rates start to go higher, now you see a change in the economics indicators. So you see the market is trying to go to a different trend. When the market goes from bull to bear market, or bear to bull market, or if there is a small correction, usually that's when volatility picks up. And if you're an investor, and if the market is going to trend lower, you can really lose a big chunk of your portfolio. So just be aware of that. If you're a trader, you are supposed to welcome volatility, because it can help you out in making huge gains, like 10%, 15%, 200%, like today, or like yesterday, 70% like today in the market. But do not be greedy. Do not chase those stocks. Like, I personally would not hold this stock yesterday overnight, even though today it spiked again. So congrats to to people who hold the stock. But if you are a gambler, then you hold the stock. If you're a trader and you use risk management properly, like, there was no reason to hold the stocks after the close yesterday. Like, for me, the best thing is that trade it yesterday, make the profit, see how it was trending today. If you see that there is an opportunity, then buy again. Today there was another opportunity to buy the stock again around $19 per share. You would have made probably $4 or $5 at max, because you would have sold the stock here. So do not, when there is volatility and there is a big spread, meaning the difference between asking price and bid price is a lot. When there is this, do not be greedy, do not chase the stocks, make your money and leave. If you're an investor and volatility is there for 1 week, 10 weeks, 1 month, 10 weeks, 2 months, and so on, this can be really bad for your portfolio. But if volatility is there for like 1 week, like it was in February, no reason to be worried, because it means that the stocks are cheaper. So probably you will want to buy more after volatility is over. So basically, all I did in this video was to explain why there are those big movements in the stock market some days, why there are stocks that spike 200% in a day, and how to trade them, what to do to trade them, and if you're an investor, how to deal with volatility. So basically, if you're an investor, the best thing is that you don't want your portfolio to be wiped out, because if the market is volatile, there is a big chance that you can lose 10% or more in a week, and you don't want to do that. So always pay attention to volatility, and if you see that there is a trend of volatility to go up, make sure to be safe and to diversify your portfolio, to change your investments, or even if it's necessary, get out for that particular week or month where volatility is high, and then get back in when things get back up with the lower volatility. If you're a trader, you really are hoping volatility to be there, but as volatility can help you, it can also hurt you, and it can blow your account in a matter of minutes if you don't know what you're doing. So hopefully you guys know what volatility is and how to trade volatility, and I'll see you guys in the next video. Please leave a comment, subscribe, follow me on Instagram as well, and we'll see you in the next video. Thank you.